Hello and welcome at Stocks Advisor channel. Today we will look at famous Zoom video communications company traded at Nasdaq, ticker name ZM. Well, Zoom is a company that was boosting after COVID actually breakout, and it was showing very nice growth almost several times, and did grow indeed. And now we see it's going in the correction phase, although its earning reports for Q3 were very nice, and actually it beat the expectation almost 2 times. But now there is some correction taking place, which is mainly caused by the jump that took place in September here, and now we are just correcting almost the same amount. And this will, of course, raise many questions. Is it still a company to buy, to hold? What's future for it? What are the risks and possibilities from technical point of view? Well, to understand this, let's do quick analysis for Zoom. We can see here that we have 2 major trends for the last actually 5 months, like the big waves. And one is this one, and that's where we're sitting today actually, and it was indeed the trend that started, the bigger wave started almost the beginning of June, then it was once reconfirmed in about let's say almost middle of August, and today we sit on it as a volatility point, so let's call it T1 trend. And at this part, at the later part of today, it's not really working as support but more like a volatility, so it might be the bounce tomorrow from these levels higher. But overall there is also another trend, the faster trend that was seen, and this is the trend, let's call it a T2 trend, and this was mainly by acceleration of the COVID, after COVID situation, the fact that many businesses are going sitting on remote type of working. Therefore this was really going well. And I mean, in the meanwhile, we saw forming actually 2 decline lines. One is a very rare case, it's upper decline, meaning like it's upwards channel, but it was unable, the price was unable to pierce it any further. And after going 3 times in overbought area with this channel R1, actually it turned to downwards channel now, and we see this channel downwards, let's call it R2, being formed. And actually now after secondary tryout to let's say break it at 3 trading sessions ago, we see a significant decline. So now where we are now, actually the situation is that we're sitting in T1 line, which at the moment works as volatility, because also there is another volatility level here, and these both actually make it quite supportive level, let's call it V1. So what might happen tomorrow price might even actually bounce from here, but it's not expected that it will, if this happens, it's not expected that it will go anything higher than R2 channel. So this R2 downwards channel is actually kind of going to be dominant sometime, because also we see here formation of lower channel here. And this is important line to understand. We can call it R3, and this one is actually will be will be an attractor and resist for further trades that we will see. So today we're sitting in this triple point, so tomorrow's action will show, so scenario 1 is we will rebounce up, then try again to pierce R2, and then return again to R3. If this scenario takes place, let's call it scenario 1, so meaning like we go all the way to R2, then return to R3. If this takes place, then we will know what to do here, and actually the entry point will be all the way to R3. At that moment it will be actually the first support line will start just at 300 exactly, and the lower one will be at 275. Also there is another strong support level sits here, actually a bit higher, and also that worked as a confirmation point for T1 in the middle of August. So let's name the lines. It would be then S1, S2, and this would be S3. And also I remind you, we have here 3 moving averages depicted. It's moving average 20, 50 and 200 being green, blue and red lines correspondingly. So what we have now is a moment, it's a bit crowded because there are many support lines, but if scenario 1 takes place, so we go all the way to R1 and then we return to R3, then it would be advised to wait until we reach actually the R3 and let's say the area of a channel of S1, S2 would be first entry point, and then if a deeper decline takes place, then actually anything below S3 would be considered as a secondary entry point. So again, it's this scenario 1, then first entry point is S1, S2, and average down second entry point would be below S3. And again, it's advised to buy with 1 to 2. So if tomorrow we have rebounds, it's advised to wait then. If we have immediate peers from tomorrow, so we go any further lower, so it would be then the second scenario. We go below R3, so we go then R3 towards, then it will be S1, S2 line, and then actually it will be already immediate first buy again at the channel S1, S2 here, and actually then moving average 200 will start working here as a very strong support. And in this case, anything below actually the middle of a moving average 200 and S3 and all the way down a little bit higher will be as a secondary support line. But then it's important to remember that the price might spike, not really go down, but spike a little bit further. And here is the third support line just at 200 sitting here. That should be considered as a final defense, a final actually average down, and then it's advised to wait if we pierce a little bit further. And then the strategy would be 1 to 2, meaning that you buy with 1 portion, then you average down with 2, and again average down with 2. So if first scenario is taking place, it's advised to take 3 portions and play. If second scenario takes place, it's advised to take your portfolio in 5 portions and play. And then the play would be again S1, S2 as a first entry, then actually SMA 200 and S3 as a second entry, and the third would be anything actually that is below S3 would be the third entry here. And then some rebounds might take place. It could be full reverse or rebounds, still a question what it will be. If it will be full rebounds, then we will have a parallel shift of T1 trend. So most probably it will be like zigzagging, where this would be T1, this would be one of the scenarios, and then another T1 stroke, or it might be spiking and forming a channel, another channel, but then we will need to see what channel it will be. Anyway, this is let's say the subject for further considerations here. For the moment, is just waiting for these two situations, for these two opportunities. You can still try to play on possible tomorrow bounce back, but this would be purely casino, so we don't advise this. Better to wait here for either one or second scenario. In that sense, Zoom is quite a good company, very volatile in coming days, because any good news on COVID will actually push it down, because there will be threat, let's say, that the remote work paradigm will slow down, and then actually all companies providing remote access, remote meetings possibilities will decline in their profits, and therefore the price might go down. But until that, it will be very volatile, so you can make either one or first or second scenario to play here. Overall, should be very cautious, very let's say aware, and average down and buy in the right time. Again, it's not advised to play here at V1, because this would be purely casino play. But if you are really like a technical trader, so meaning that you play on exact points of entry, exact points of exit, without doing any unexpected move, that's the advised strategies. With this, please again do not forget to subscribe to our channel if you didn't do so before. Also press the bell so you will not miss new videos, new interesting discussions. Also check other videos where we discuss interesting opportunities, and see you at another episodes at Stocks Advisor channel.